Everyone, hopefully you're doing well today. So today I'm just going to go over one of the concepts in terms of financial literacy and how I'm using it in terms of paring down my debt. Welcome to the channel. My name is Will, and I try to help others understand velocity banking, business, house hacking, and other financial aspects. So let's go ahead and get started. All right, so this is day 902, part one of what I call frugal velocity banking. It's an offset of velocity banking, and what I'm doing is taking my basic paycheck and dumping it into a line of credit. That line of credit can be a household line of credit, that can be a business credit, personal line of credit, also a home equity line of credit, or just a plain old credit card, which I'm using now as my line of credit. So the credit card that I have has an interest rate of 22.74, and if you look on your credit card statement, you see your interest rate, and then you'll also see a daily rate. And this is how the daily rate is calculated. So it's taking the interest rate of 22.7%, converting it into a percentage, 22.2274. That I'm dividing that 2274 by 365 days in the year. There's also 366 days of the year, which means a kind of leap year. Once I get that, this will give you what's called a daily interest rate. And for here is 0.000623%. Let me get out a calculator and make sure that is correct. So 22%, I'm going to convert it to a decimal, 0.2274. 0.2274 divided by 365 equals 0.000623. All right. So on this particular credit card, they had a balance of maybe 7,400 or a little north of 7,400 about in May. So here is the cycle that I started off with. It was a 30-day billing cycle for this particular credit card. Started off with 7,400. I put one of my entire paychecks, which is advocating for velocity banking, onto the credit card, and that brought it down to 54.89. So this 1845.13 was 2 weeks of work, 80 hours net, after the government took the taxes, insurance, and things of that nature. So that brought it down. Here it is, 54.89. Now, again, last time I got $300 in rental income that came in. I added that also to the credit card, so that lowered the credit card even more. $5,254.89. So every time I get a penny, dime, a dollar, or any type, I'm throwing at whatever debt line of credit that I'm trying to pay down. And in this instance is a credit card that has 7,400 limit on it, and I'm starting to pay it down. And this was in I think May. So let's say 5/1/26. All right. So next, I'm taking, in order to get the average daily balance, the bank is looking at what was the balance on those particular days. So on the credit card, I did not charge anything so far. I kind of just used another card on the end. And from 6/6/3 to 6/16, the balance was 54.89 for 15 days. Then from 6/17 to 6/30, the balance was $5,254.89. So out of a 30-day billing cycle, 30 days, out of the 30-day billing cycle, 15 days had an average balance of $5,554.89. And then when I made that 1845 and that 300 for the next cycles, $5,254.89 for the next 15 days, for a total of 30 days. Then I added the 2 days up and divided them by 2 to get an average daily balance, which was 52, 54, 89. Now again, we go back up. This was a daily interest rate. So if you go into your credit card statement, you should see your regular interest rate, and then in a line, or at least on my credit cards, the next column or the next field is your daily periodic rate. So now I'm taking that daily periodic rate and I'm multiplying it by the average daily balance here. And that gave me $3.27 per day. Okay? So again, my interest rate, 22.74%. Convert that to a decimal, divide by 365 to get the average daily rate. Then I had to figure out the average daily balance, which was 52, 54, 89. And again, it may fluctuate with the card, but I'm trying not to make any charges on this card until I pay it off and I'm charging other places. All I'm doing now is just putting in whatever income I have. Now, the next paycheck, so this is only the first 2 weeks of the month. The second 2 weeks of the month is another $18.45.13, but that's going to pay my housing and other expenses. Okay, so now we got that daily rate of $3.27. There's 30 days in the billing cycle. That interest should have came out to $98.21. But if you remember, this was a balance transfer that they allowed me to have. So I initially got the card and it was a 0% interest for, I think, maybe 15 to 21 months. And then I think they saw me chunking lots of money to pay down the card. And recently they sent me another offer that said, hey, you can transfer some more money in at 5% transaction cost, and it's going to be 0% for another 12 months. Now they're giving me to, that's the wrong date. They're giving me to 8/31/27 to transfer as much as I can under the 7,500 limit of this card, and it'll be at 0% for 12 months. Plus, I'm still under the 0% until about 15 to 21 months. So this 98.21 is not the interest that I'm paying. The only thing that I'm paying is a 1% of the balance of the card. And last month, I think it was $79 only, 1%. So let's see, 7,400 times 0.01, 74. It was $74 going directly to the principal. No interest, directly to the principal. So if I had a $100 balance with a 0% card, and they were, say, 75 interest, then that would only leave me with a balance of 25, because there is no interest and there is nothing else. Okay? All right, so I just wanted to come in and talk about the daily periodic rate, the average daily balance, and also a little about 0% card that I'm using in Velocity Banking. So in some of the videos where you see interest is calculated on the card, no interest is being calculated on these cards. Now earlier they were, because they had balances on them, but now I have 4 cards that's 0% and 1 card that's 18%, and I'm using that in Frugal Velocity Banking to pay it down. All right, thank you very much for joining me. If you have any question, please hit the like button and please give me comments on the bottom so that I can better explain or to help others understand how I'm paying down my debt. Bye-bye.